We'll shortly be joined in our Joburg studio by Matthew Buckland from Creative Spark. Jeff, starting with you, are you basically saying that because Google doesn't pay tax, it can offer cheaper rates on advertising and you simply can't compete?
So, Francis, firstly, thank you very much for inviting me onto the show. I think we're saying, we need to be clear. First of all, what Google is doing is absolutely legal. They're following clear legal precedent. And it's not just Google, it's a number of companies, as you alluded to into your introduction, like Amazon, like Apple, that follow similar practices. And what we see as a digital business at the coalface of the South African digital economy are international giant operations that are scooping revenue and personal information out of this country without necessarily giving anything meaningful back. And we think it's a good time to raise a question with our legislators and ask them, is this right? Is this something that should be happening?
Government is stepping in with the VAT from the 1st of April. Presumably you do welcome that.
Look, I think VAT is, obviously, it's a step in the right direction. But as I would guess, your guest from Treasury will tell you, VAT is just the beginning. The VAT is really, it's an in and out transaction, effectively. What it doesn't recognize is business operations in a territory. So many of these global, multinational digital platforms employ people in the countries that they operate in and generate revenues, in some cases very considerable revenues, in these territories without giving anything back significantly to the fiscus or society.
You've raised the question of PAYE, pay as you earn, as well. Google says it does pay its staff here. Presumably you wanted to look at all staff all over the world involved in selling online revenue here and opening its books, exactly how much it makes. And it's incredible. You're saying 1 billion rand. But this is so complicated, Jeff, because we have the issue of duplicate taxing. Surely if this could have been done, France would have done it already.
Absolutely. We're not saying that it's an easy process by any means. I don't think any country in the world would not have done it had there been opportunity. But we have some of the best laws in the world. We have some incredible legal minds. And I think we should be using that brainpower to ask questions about saying, how do we as society, how do we deal with dominant global platforms? Do we need to be concerned as a society? Do we need to ask questions about how we protect our citizens from threats they may or may not know they are facing?
Do you have any advice for Treasury that's looking at this and, like you say, would want to find a way to deal with it, but incredibly difficult, and South Africa would have to be a pioneer here?
Well, look, I don't think that we're necessarily pioneers. I think, as you alluded to earlier, there are a number of examples around the world, from France to Italy to Brazil to certain areas in Western Europe, where legislators have asked questions of these global platforms. And I think that there is a growing base of intellectual property that can be used by local legislators to help form opinion. And I think that's really the first part around this thing, is about saying, we're raising a flag because we think that there is a potential for damage to South African society through these dominant platforms. And it's probably a good time to form an opinion about whether or not we're right, whether or not it's worth having the discussion.
My final question to you, Jeff, because Google has raised this, aren't you making a lot of money off their search engine directing people to your sites?
So let me kind of say another thing. I love Google. I use Google all the time. I think they are a fantastic company with absolutely great products. And from a business perspective, we absolutely use a number of their services. That doesn't mean that as a member of society and as a tax-paying business in South Africa, we can't question their methods or business practices. And again, this is not just an issue with Google. There are a number of global platforms like Apple, like Amazon, that operate in similar fashion.
All right, thank you very much. Jeff Cohen joining us, the CEO from 24.com in our Cape Town studio. Let's come back to Johannesburg, where I'm joined by Matthew Buckland from Creative Spark. Great to have you with us, Matthew.
Thank you.
Let's just move away from the competition area for a while and look at the big picture. A lot of people are saying that Google has shaved off billions in tax, billions that could have been used to uplift people around the world. Is it evil, as some people say?
Look, it's not evil. It's not illegal. It's not illegal until governments pass a law making it illegal. So, for example, in Italy, a special Google tax has been, a special Google law has been passed, which puts special taxes on Google. And obviously, that makes what Google's doing illegal.
So something we could learn from.
Absolutely. I think what's happening in South Africa is nothing unique. France has hit Google with a €3 billion euro tax bill. You have UK parliamentarians speaking out against Google and using pretty strong language. And you've had Italy actually passing legislation. So this is a worldwide issue, a worldwide problem. And in many sense, it's a new world problem, a new economy problem, created by new business practices. So I think you've got a case of a highly innovative company, an excellent company which produces amazing products, and a case of the law catching up to that company. So in many ways, Google is behaving rationally, like a rational capitalist. And I think the onus is actually on government and regulatory bodies to close those loopholes, to make sure there's a fair playing ground.
Well, my other question then is, when Naspers behave rationally as well? I couldn't ask Jeff because he's from the digital arm, but they own a third in Tencent, this massive internet company in China. Do we know if they're playing fair there?
Look, I can't really comment on Naspers, and there certainly hasn't been the scrutiny around Naspers's international revenues that there has been on Google's, that's for sure. Another thing to say is that I guess to answer that question, you'd have to look at Naspers's annual reports. It declares its revenues. It's a public company. I think Google does not declare its revenues from countries around the world. It only declares its US income and only declares its UK income. So in many respects, we're actually unsure of what Google's making in this country, how much tax it's paying, and that's a problem in itself. And I think a key difference here is let's look at Naspers as a company in this country. It's a big investor in this country, big investor in technology. It's a big investor, a big employer. And I think we have quite a different scenario where you've got a company with heavy investment, a company making a lot of money, but a company applying heavy investment into the country. Whereas the question around Google's practices is you've got a company making a lot of money, estimates of R1 billion, and there's the questions about how much of that money is being invested back into the country, either via tax or job creation. And a lot has been said about a relatively small Google office in South Africa. I think it has an office in Bryanston of around about 35 people, and obviously the indirect jobs created via agencies. But of course, estimates of R1 billion in revenue, I mean, those are pretty good margins.
I will be speaking to Treasury shortly. Very quickly, this VAT, the new regulations coming in on the 1st of April, will it go some way towards levelling the playing field? It
will go some way, but I think South African media companies who Google competes with and essentially competes for digital budget with, they would want the same rules to apply to Google as they apply to them. They pay their 28% company tax, and they would want Google to pay that same 28% company tax to make sure it's in a level playing field.
All right, thank you so much, Matthew Buckland from Creative Spark. Let's move now to Pretoria, where we are joined by the Treasury. We're joined by Cecil Morden, who's the Chief Director of Economic Tax Analysis. Good evening to you, Cecil. What's coming out tonight is the sense that Treasury is not going far enough to help local advertising platforms. Your response?
Good evening, Francis. Yes, I think this issue is a pretty complex issue, as your previous guest has mentioned. There are two specific issues that we're dealing with here, and we need to just look at it separately. One is the issue of income tax on the one side, and the other one is consumption taxes. On income tax side, which both of your previous guests have talked about, the challenge there is the rules around international taxation and whether a company has a presence in South Africa or not. In the tax law, they talk about the permanent establishment coupled with effective management. Those are issues that are being dealt with at the international level in terms of double taxation agreements. And these things takes time to develop. The OECD and the G20 is now embarking on a major project called base erosion and profit shifting. And the digital economy is top on their agenda. And so it's something that is being addressed, and we hope to catch up in terms of the debate on those issues, yeah.
Cecil, could we not do a bit more now? Matthew raised the example of the Google tax in Italy, I think it was. So some governments are taking a stronger stance. Could we not do that?
To the extent that a company has a presence in South Africa, and in terms of existing international agreements, we can do something. So if a company has a presence here in South Africa, local presence is registered either as a South African company or a local branch, we are able to take action. It's difficult for me to give you specific examples in terms of Google. The South African Revenue Service would be in a better position to do that. But there are many companies that have a presence here, and we can tax them.
All right, let's talk about the VAT regulations coming in on the 1st of April. A lot of observers have said, you know, this is really hard in itself. How are you going to get all these foreign companies to pay VAT, to give you their details? Are they coming on board as we speak?
We have published the regulations for comment, and comment is due later this week. We are hoping to engage with the various role players. We have had direct contact with Amazon, for example, in terms of their requirements and how they can comply to it. We think this is a first step, and I think it will be in the interest of all the major players to come on board. They've got a reputation to look at. On top of that, the South African Revenue Services have entered into double taxation agreements with many countries, as I said previously. There's also a development of exchange of information. And so they would be able to get information on certain companies that do supply services in this country. And that we hope would be a basis on which we can track companies that do supply digital goods to South African consumers.
My final question, Cecil, there are claims that the country could make R1 billion off of this VAT alone. Does that add up with what you're guessing?
Well, that's difficult to say. The numbers are hard to come by because where we sit, because from a tax perspective, they were outside of the net. We haven't had a particular view on the total numbers, but it's not difficult to make an estimate of the turnover of various companies. And yes, it could be a sizable amount of money. Will it be R1 billion in the foreseeable future? I doubt it. Probably maybe half of that.
All right. Thank you so much for your time this evening. Cecil Morden, who's a Chief Director of Economic Tax Analysis at the Treasury. All the day's top stories coming up after this break.